Let's keep the worldview going by heading to London for an update on what's happening in European markets. The European Central Bank announcing a change in its approach to inflation following what the U.S. Federal Reserve did in tweaking its approach to its 2% inflation target. Yahoo Finance's Latoya Harding is in London and has the update on the ECB. What has President Lagarde told us about exactly what changed here, Latoya?
Yes, so the European Central Bank announced the long-awaited results of its review strategy today and set its inflation target at 2%. So in summary today, the most significant change was the modification of its target to below, but close to 2%. So that's what it was previously, now to a symmetric 2% target over the medium term. So it's the third time that the ECB has changed its definition of price stability. So in January last year, the central bank embarked on its first policy review since 2003, but the outcome was postponed due to the coronavirus pandemic. So today, at the press conference, Christine Lagarde said that the new inflation target was clear and easy to communicate. And she added that the 2% target as well was not going to be consistently, not going to be a consistent target, and that there might be some moderate temporary deviation in either direction, she said. And she said that was okay also. So the move basically by and large will give more flexibility to stimulate the Eurozone economy without the ECB breaking its commitment to that price stability as mentioned. And of course, this is all following on from May's CPI inflation, which actually did hit 2% for the first time in about 2 years.
Latoya, let's zoom in specifically on the UK economy. We've been talking at length about challenges filling jobs here stateside. Apparently a similar story playing out in the United Kingdom. What does the labor shortage, labor challenge, if you want to call it that, look like over there?
Yes, so UK employers are dealing with a huge crisis at the moment. It's the worst labour shortage since 1997. And we've heard basically for the last few months, it's particularly in like the hospitality and leisure sectors, that there's been a real struggle getting people in as the economy reopens. And of course, this rush to reopening the economy as we enter these stages, particularly in the UK, that has definitely had a big effect on hiring and on labour, but also a departure of overseas workers. Of course, people home due to the pandemic, and also, of course, Brexit, as always, having an effect as well. So all of these kind of things added together have really added to that crisis. In certain industries, particularly, as I've mentioned hospitality and leisure, but we've also seen labour shortages in transport, hospitality, construction and manufacturing. And today's data also showed that staff availability has fallen at the quickest rate on record, and trouble even been spreading to what is typically higher paying sectors as well, such as finance, IT, accounting, and even engineering as well. And this all comes as the UK's furlough scheme comes to starting to wrap up at the moment, and that will finish in September. We've got around 1.5 million workers still furloughed. Right. So again, there are restrictions, of course, as people returning to work, but yeah, definitely also adding to that shortage.
Yahoo Finance's Latoya Harding on the other side of the pond. Thank you so much.